Welcome back to Investment Edge. In this video, you'll discover 7 potential assets that can help safeguard your wealth in the event of a dollar collapse. As various nations reduce their reliance on the US dollar, concerns about its stability are on the rise. While experts debate the likelihood of a dollar decline due to its status as the world's primary reserve currency, data from the American Enterprise Institute shows that the dollar has lost 96% of its value since 1913. This suggests that even dominant currencies can experience significant shifts over time. Although the future of the US dollar remains uncertain, it's essential to prepare for various outcomes. Asset number 7, precious metals. Throughout history, gold, silver, and other precious metals have established themselves as enduring and dependable assets. Their allure stems from their intrinsic value and the fact that they have functioned as a form of currency for countless generations, rendering them particularly attractive during times of economic or political uncertainty. What sets these precious metals apart from conventional paper currencies is their inherent resistance to government monetary policies and the perils of unchecked printing. The limited supply of precious metals acts as a safeguard against the perils of swift devaluation, a risk that paper currencies are especially prone to. In the face of inflation or political instability, gold often emerges as a beacon of stability, drawing investors who perceive it as a reliable haven for preserving their wealth. However, it's crucial to acknowledge that while gold and silver possess the remarkable quality of stability, they do not share the dynamic potential of some alternative assets. Unlike stocks or bonds that provide regular returns in the form of dividends or interest, precious metals are not income-producing assets. They rely on their intrinsic value and the market's perception of their worth. For those interested in diversifying their investment portfolio with precious metals, there are several routes to explore. One can opt for the traditional method of acquiring physical items like gold coins or bullion, but this approach has waned in popularity due to concerns regarding secure storage. Alternatively, an increasingly favored option is the Gold IRA, a retirement account specifically designed for gold investments. Rather than physically storing gold bars or coins at home, investors can place their trust in tangible assets held in a secure, managed environment. This modern approach offers convenience and peace of mind while maintaining exposure to the enduring value of precious metals. Gold and silver are undoubtedly the most celebrated of precious metals, with a historical track record of maintaining their value. However, they are only a fraction of the broader landscape of potential investments. Other precious metals, such as platinum, palladium, and rhodium, also warrant consideration for those seeking to diversify their portfolios. Platinum, a rare white metal commonly used in jewelry, exhibits a more dramatic price fluctuation compared to gold. Palladium, a silvery white metal similar to platinum, often mirrors the price trends of platinum due to their structural similarities. Rhodium, another silvery white metal, stands out for its notable rarity and frequent application in catalytic converters. However, rhodium is not a typical choice for most investors due to its extreme price fluctuations, making it a more specialized and risk-intensive investment. Asset number 6, collectibles. Collectibles have garnered widespread favor, serving both as a source of personal gratification and a means of investment. This proclivity has surged in recent times as individuals actively explore unconventional avenues beyond traditional investment options. The realm of collectibles, encompassing diverse categories such as art, classic cars, sports memorabilia, antiques, and fine wines, presents an enticing blend of aesthetic allure and the prospect of accruing value over the passage of time. Nevertheless, delving into collectible investments entails a distinctive set of considerations and challenges. These prized items operate within distinct and often niche markets, which demand a more specialized understanding. For those who wish to convert these cherished items into monetary value, the task of locating potential buyers can be intricate and time-consuming. The process necessitates a considerable degree of patience and diligent research to navigate the ebbs and flows of these unique markets effectively. Asset number 5, foreign currencies. Foreign currencies have emerged as a safeguard in the event of a potential decline in the US dollar's value. It's a well-acknowledged fact that all fiat currencies, including the US dollar, bear the inherent risk of devaluation or even complete collapse. Consequently, investors frequently opt to diversify their investment portfolios by including foreign currencies, which are viewed as relatively more resilient options. Popular choices for diversification encompass currencies like the Chinese yuan, Japanese yen, European euro, and Norwegian krone. These are perceived as having a higher degree of stability compared to the US dollar, hence adding an extra layer of protection to investors. However, it's imperative to recognize that foreign currencies are not impervious to the various influences within their respective nations, and they, too, can experience fluctuations. Therefore, while foreign currencies serve as a useful tool in mitigating potential economic instability, they shouldn't be seen as an absolute shield against all risks. A comprehensive strategy involves diversifying across various asset classes, which can provide a more effective means of managing these uncertainties and safeguarding one's financial interests. Asset number 4, Bitcoin and other cryptocurrencies. In times of economic instability, the allure of cryptocurrencies, exemplified by Bitcoin, frequently intensifies. These digital assets operate independently of conventional banking and financial systems, presenting an enticing prospect for expanding one's investment portfolio into new frontiers. However, it's imperative to recognize that the value of cryptocurrencies is characterized by significant volatility, and engaging in their investment is not without inherent risks. Before delving into the realm of cryptocurrencies, one must be well prepared for the possibility of losses. The mercurial nature of these digital assets demands a level of caution and a thorough understanding of the associated risks. While the potential for substantial gains is undoubtedly present, so too is the potential for significant losses. As such, investing in cryptocurrencies necessitates a prudent and calculated approach, with risk mitigation strategies firmly in place. Asset number 3, foreign stocks and mutual funds. Allocating funds to foreign stocks and mutual funds can serve as a protective measure against the depreciation of the US dollar. The act of diversifying in this fashion not only shields investors, but also opens up the potential for capitalizing on the growth of these assets and capitalizing on advantageous shifts in currency valuations. Investing in international equities presents a spectrum of avenues to explore, each with its unique advantages. One avenue is the direct purchase of foreign stocks, enabling investors to hold ownership in companies from other countries. Alternatively, investors can opt for American Depositary Receipts, ADRs, which are traded in US dollars but closely tethered to the native currency of the underlying stock. ADRs afford the convenience of trading in familiar currency while preserving exposure to the native currency's performance, thus offering the best of both worlds in terms of convenience and financial strategy. Asset number 2, real estate. Real estate is highly esteemed for its intrinsic capability to maintain or gain value over extended periods, a trait that endures even in the face of economic downturns. By diversifying investments across both domestic and foreign properties, individuals can craft a resilient investment strategy that not only yields a dependable income stream, but also acts as a reliable safeguard against the erosion of the US dollar's worth. The advent of platforms such as Airbnb has ushered in newfound ease for property owners to capitalize on their assets by offering them for short-term rentals. This innovative approach adds a supplementary layer to the advantages of real estate investment, providing an opportunity for property owners to realize significant financial returns. However, it's crucial to bear in mind that real estate investment is no fleeting endeavor. It demands dedication, an in-depth comprehension of the property market, and an abundance of patience. The primary reason is the illiquid nature of real estate investments. Unlike readily tradable assets such as stocks or bonds, real estate assets require time and often extensive processes for conversion into cash. Therefore, while real estate holds the potential for substantial rewards, it's an investment avenue that necessitates a substantial degree of commitment and a strategic long-term perspective. Asset number 1, land. Land, in its essence, represents a finite and inherently precious asset. Its inherent value persists and flourishes, making it an alluring investment option, particularly in highly coveted locations. Although land investments may entail substantial initial outlays, they yield a fortress of stability and predictability, rendering them an astute choice for safeguarding and perpetuating wealth. Before investing in any of these assets, it's crucial to carefully assess your financial goals, risk tolerance, and investment strategies to make informed decisions about safeguarding your wealth in uncertain economic times. Thank you for tuning in to our video on safeguarding your wealth in uncertain times. We've explored a range of investment options from precious metals to real estate, foreign currencies, cryptocurrencies, and more. If you found this information valuable, please give us a thumbs up and consider subscribing to our channel for more insightful content on financial strategies and investment tips. Remember, the key to financial success lies in diversification and informed decision-making. Whether you're looking to protect your assets or grow your wealth, the right investment strategy can make all the difference. If you have any questions or would like to share your thoughts on these investment options, please leave a comment below. We're here to help you make the best choices for your financial future. Stay tuned for our next video where we'll dive even deeper into the world of finance and investment. Until then, take care and make smart financial decisions. See you in the next video.